Good day, ladies and gentlemen, and welcome to the company update of Calibre Mining on Commodity TV. Late last week, Calibre Mining announced its operating results for the third quarter of 2024, underpinned by lower 2024 production guidance and an increase in expected unit costs due to lower gold production. The company now expects 2024 production to be between 230,000 and 240,000 ounces of gold, an 18% decrease from the midpoint of its previous guidance of 275,000 to 300,000 ounces. Overall, Calibre's operations were further hampered in the third quarter by ongoing mine sequencing issues at Limon, as ore shipments from Volcan were lower than estimated, resulting in continued lower production at the Latin American operations. Nevertheless, the company and many experts expect the fourth quarter to be the company's strongest quarter of higher production from Volcan, resulting in Nicaragua achieving approximately 59,000 ounces in the fourth quarter and 237,000 ounces of consolidated production for the full year. Additionally, given the increased transportation rates to Libertad, Calibre is holding approximately 30,000 ounces in inventory that will be available for processing in 2025. If we take a closer look at Calibre Mining's figures, we see that production in the third quarter continued to fall short of expectations after a weak first half of 2024, as the company sold just over 46,000 ounces, minus 21% quarter-on-quarter, of which around 36,500 ounces came from Nicaragua, minus 26% quarter-on-quarter, and just under 10,000 ounces from Nevada, plus 6% quarter-on-quarter. Consolidated gold sales ultimately fell well short of the consensus of around 75,000 ounces. Overall, Calibre had originally expected the start of operations at Volcan to significantly boost production in Q3, but the company reported that increased historic small-scale mining resulted in resource depletion of approximately 20,000 ounces from the pit's first benches. But this is probably only temporary. In Q4 and beyond, the company sees an increase in contributions from Volcan as the ore tonnage and grade at Volcan has been confirmed by infill drilling, and the deposit model is now significantly de-risked. What stands out negatively is the logical fact that unit costs increase with lower production. In addition to the revised production guidance, Calibre now expects consolidated cash costs of between $1,300 to $1,350 per ounce, with AIC revised upwards to $1,550 and $1,600 per ounce, an increase of 18% and 19% respectively from the midpoint of Calibre's original cost guidance. Against this background, Calibre's full-year expenditure remains within budget, as the lower number of ounces sold was the main reason for the above-mentioned increase in unit costs. In addition to the numbers, there was also a construction update for Valentine in Canada. As of 30 September, Calibre reported that Valentine is now over 81% completed. Pre-commissioning is underway as the company has maintained its schedule for first gold pour in the second quarter of 2025. At the end of the third quarter, Calibre has spent $547 million as initial project capital has increased to $744 million, an increase of $91 million from the company's previous guidance. In short, despite this increase, which is primarily due to underperformance by contractors, the Valentine expansion remains fully funded as the company has cash and restricted cash of approximately $300 million. The last quarter was certainly not ideal, but we continue to view Calibre Mining as a growing mid-tier producer with leverage to gold prices. Looking ahead, we expect Calibre shares to continue to attract investor interest as the company is positioned to bring Valentine online in 2025. We see the current slight weakness in the stock as a strong buying opportunity. The point-and-figure chart touched now our first price target of $2.75 to $3 and fulfilled our expectation. The next price target is now $6 for the stock. You can also find all the information on our Commodity TV app in German and English, as well as everything to do with commodities. We look forward to your like, and more importantly, please subscribe to our TV channel. Please note the disclaimer. The stock discussed is part of the SRC Mining Special Situation Certificate, and of course I'm a shareholder in the company. Thanks for watching us, and bye-bye from Switzerland.